The Sustainable Development Goals, or SDGs, were adopted by all United Nations member states in 2015 to end poverty, reduce inequality, and build more peaceful, prosperous societies by 2030. Many of the global challenges to development are especially salient for the children and youth. It is their future that depends on how well these SDGs are adopted. Where do our children or the youth stand today?
There are still a lot of kids
that can't go to school
because their families
can't afford their education.
Other kids have to walk a long distance
and even cross rivers and climb mountains just to go to school.
A lot of kids cannot go to school because the parents don't have money.
People are using up the world's resources
without thinking of the consequences,
like global warming. We have a lot of natural disasters
like super typhoons and forest fires
that destroy the livelihood and homes of many people.
People's waste are reaching the oceans,
killing turtles, fishes, and other marine life.
The number of animals are getting smaller and the food supply is getting smaller.
Why do you think their numbers are getting smaller?
Because they're getting endangered. The people have been cutting the trees in their habitat.
A lot of people are getting sick,
especially because of COVID-19. Everyone is affected.
Yung ibang people hindi makapunta sa hospital pag sick sila.
What is the ideal future for our children?
Sana lahat ng bata ay mabigyan ng pagkakataong makapag-aral.
I dream of a future where no kid gets left behind.
I hope people can start doing their part in saving the earth
by doing simple acts
like recycling or bringing our own water bottles
for our beverages.
Our family has learned not to use plastic bags, and I just hope others learn how to do that too.
Sana walang bagyo na makakasira
ng mga pinaghirapan
ng aming magulang.
I wish for a greener environment. Less pollution.
I hope governments and people work together so we can fight any virus
or any sickness
that comes our way.
I hope that everybody has an access to medicine and proper nutrition.
Sana may pagkain mga pamilya para wala nang maglimos. All of the kids have to stay healthy. We dream of a future where every child thrives.
Every child lives in a clean environment.
And every child has a fair chance in life.
Now more than ever, we must work together
to make the world a better place,
to ensure healthy lives, improve access to education,
to combat climate crisis.
Aligned with the ATRAM's mission to engage, inspire, and collaborate
to build a financially secure future,
we are committed to building that future where no one is left behind.
We have adopted 3 out of the 17 SDGs,
aiming to make a positive impact,
as well as ingraining more responsible
and sustainable business practices within ATRAM.
At ATRAM, we value our children's dreams. Let's make it happen for them. Through the ATRAM Sustainable Development and Growth Fund, we'll invest in companies that embrace sustainability and believe that this is key to a better Philippines and a better future for us and our children.
If we be nice to our planet Earth will be nice to us.
Invest to thrive. Invest together.
Hello everyone and welcome. I am Armena Ganyo, Credit Analyst, and it is my pleasure to be your host for this week's episode of ATRAM Webinar Series. Are you a moderate investor seeking global exposure? Now's the time to diversify your portfolio with a unique unit-paying fund invested in global bonds. The ATRAM Global Bond Income Feeder Fund provides investors with a wide range of bonds from various sectors around the world. Stay tuned to know more about this fund and how you can gain access to global corporate bond markets to reach your medium-term goals. And if you have questions, you may send them as early as now by clicking on the Q&A button below your screen. And before we begin, I'd like to let you know that this session will be recorded and that copies will be disseminated within the day, as well as posted on all our social media platforms. Also, please don't forget to visit our website, www.atram.com.ph, for a more detailed information about all the funds that we offer. If you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session and visit our YouTube channel, ATRAM Studios. And we would like to invite you to join ATRAM's new official Viber community group, hashtag ATRAMPH Community, to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit the link on your screen and get a chance to win ATRAM's merchandise. We would like this webinar to be as interactive as possible, so please don't hesitate to send your questions in the Q&A tab all throughout the webinar. Each question you send is a raffle entry for a chance to win an ATRAM merchandise. Winners will be announced at the end of the webinar, so make sure you stay tuned until the end. We will also be wrapping up with a quick feedback survey after the webinar, so we do hope you can share your thoughts with us about the session today and how we can further improve our webinar series. And with those out of the way, let me briefly introduce our speaker for this morning, ATRAM's Product Development Manager, DJ De Jesus. DJ has been in the finance industry for over 7 years and has been with the firm for 4 years. As a product development manager, he identifies potential new product opportunities to continue ATRAM's legacy of innovation. DJ is also a charter holder of the CFA. So now, let me hand the floor over to DJ.
Hello, Armaine. Good morning, everyone. Hope everybody is doing well. But before we start the presentation, we would love to hear from our audience. Please answer the short poll that we have flashed on the screens. And there are 3 questions, so please answer all of them. There. So there are 3 questions. Please answer through all of them. There's a scroll bar on the right of the pop-up questions. So that will allow you to be able to answer through all of this. So the questions are: what asset classes are you currently invested in? What is your risk appetite and risk tolerance? And how worried are you about inflation? And this should really help us understand our audience more. We'd love to really hear from you and understand where you are in your investment journey. All right, so most of you are invested currently in equity and cash, pretty much expected. We also note that a lot of people here are moderately aggressive and moderate. So looks like there's a bit of a mismatch. We see a lot of people being more moderately aggressive and moderate, but more people are invested into equities. That is actually very interesting. And how worried are people about inflations? Most people are somewhat worried. Some are extremely worried. Some are very worried. And some are not so worried. So it's more in the middle. That's actually good to hear. So thank you for your responses. We will address a lot of them during the webinar. And from all the time I've been called to talk on here, most of what I've been talking about is global equities. And based on the study of the Chartered Financial Analyst or CFA Society, most people invest into 2 things, and this was shown in the poll: equities and money market. But fixed income plays a very vital role in investing. Insurance clients and more seasoned investors go direct to bonds for safe income. But investing in fixed income, particularly bond funds, can also provide capital appreciation. COVID-19 was generally bad experience for many. But if you were invested in global fixed income, you would have made money during the pandemic. Apart from technology and sustainability, which were big winners from the pandemic, global fixed income was a winner during the pandemic. If you see the graphs at the moment, you could see just a sample of different bonds. But you would see in 2020, most yields were down and some spreads were also down. And that would mean that because lower yields means higher prices. And this means if you held bonds prior to the pandemic, then you would have gained. And it factors into the safety of bonds. Regular investors would just go and buy bonds direct as a safe place to put their cash, increasing the overall demand of these bonds and increasing the price of the bonds. But with the recovery from the pandemic, we're seeing a reversal. Both developed market yields and credit spreads have gone up, thus making prices go down. The turning point was really early in August last year, where rates bottomed out. But you could see that the high on the 10-year Treasury yield was in March. The question is, why are these interest rates rising both locally and globally? Well, the interest rate has basically two components. The growth of the economy and inflation. And with a global economic recovery, both are going up. Here in the Philippines, it's been exacerbated by food inflation from the November typhoon, the swine flu, and oil hikes in February. But globally, it's basically the economic recovery driving interest rates up. However, this global inflation is looking transitory. And there are two main factors that will continue to drive interest rates lower. First are the long-term trends that we're seeing in the world. In the developed markets like US and Europe, population growth and productivity are slowing down. However, the aging population and wealth inequality are going up. And these factors all lead to higher savings that will drive interest rates lower. Additionally, central banks have been cutting rates in 2020 and increasing asset purchases that drive yields lower too. And the threat to rising interest rates are these factors that people are watching for. Fiscal stimulus tends to be inflationary, and with all these stimulus packages globally, that will spur growth and eventually inflation. Bank activity and increase in lending will also increase the money supply and lead to growth and eventually inflation. Finally, there have been talks by central banks possibly having to hike given the fiscal stimulus and decrease the asset purchases. So these inflation fears have led markets to be on their toes on rising interest rates, but we've seen in the past few weeks that this has been abated. But if you're interested if you're invested in traditional bond funds during these rising rate environments, while it does lead to initial losses, the higher yields do provide for more interest income. And in the long run, lead to better returns for patient investors. In short, if you're patient enough and based on history, if you hold it for 10 years, your gains would be bigger. And if you study the trend, the rising rate environments don't really last that long. The outlier was really in 2018, but on average, it usually lasts around 200 days. And that's about the time the rising rate environment has already lasted. And if we're already reading technical analysis right, the last few weeks is forming what's called a downward triangle, which should mean that interest rates would trend lower. So it's looking like a good time to invest already into global bond funds. And why not invest in the ATRAM Global Bond Income Feeder Fund? The ATRAM Global Bond Income Feeder Fund is a global bond fund available to you in Philippine pesos. The fund is invested into the PIMCO GIS Diversified Income Fund, basically one of the best global fixed income funds in the market. You know, ask yung mga relatives nyo sa ibang bansa if they have this fund, and they're likely to have it. The fund invests into a diverse stream of credit strategies, providing enhanced income opportunities. In short, it invests into multiple corporate bonds that enhance your income. It goes through the full sector rotation to navigate changing market conditions, like the title of this webinar, which means that the fund studies the economy and the markets to make sure it invests into the right industries at any point of time. Finally, the fund gives higher returns at a lower risk level. And we will go through these points as I explain the fund. PIMCO, the target fund manager, has a broad set of credit capabilities, both in the private and the public space. And it looks at both securitized and corporate bonds. Basically, PIMCO is known for its depth of understanding the overall credit market. I discussed how the fund looks at the full sector rotation to navigate yung changing market conditions. The fund does this through a top-down and bottom-up investment process. Basically, the fund looks at the broad economic themes through their forums and the investment committee meetings. You could see that small map in the slide, and that's basically them looking at the different countries and what's the growth and what's the inflation in those various major countries. The credit research team also looks at the companies themselves and provide the best ideas on corporate bonds per sector and per region. And the portfolio management team looks at all these inputs, economic, sector, region, and company, to make decisions on the fund. The fund has 4 portfolio managers headed by Yves Tounier, and it is supported by their Chief Investment Officer, Dan Iveson. The 4 manage the top-down decisions, and their investment experience is greater than 20 years each. Wow, that's a long time. To provide more scope, each of these sub-asset classes also have portfolio managers, traders, and analysts to make up the bottom-up decision. And the average experience of all these teams are greater than 10 years. So in short, this shows how the team is able to invest into broad credit strategies across the globe, really building from both the bottom up and the top down. And they are really active. If you look at this slide, you can see how in any one time, you have so many sub-asset classes, and it's always moving. It's not static. They really move through all of these asset classes to find the best opportunities for you. And just to give you a flavor of what they're investing in right now, they find the financial sector to be favorable given how the sector proves its resilience due to the regulations made by the central banks. Plus, the sector is usually the first to recover. Credit markets have that pseudo equity feel because more ability to pay means lower credit spreads, thus lower yields and better prices. It also invests into senior secured bonds, bonds that are priority for payment and have collateral to back it up. And this is for cash flow generation. They also focused on non-cyclical industries like cable and media. Given that there are bonds that are impacted by the COVID-19 pandemic, the fund has invested into leading companies that have shown resilience, but whose bonds were unfortunately priced downwards by the COVID pandemic. These bonds are expected to provide stable recoveries. And the fund also invests into Asia corporates, as Asia has higher growth prospects and is expected to benefit from the global recovery, especially China. And finally, they invest into non-agency mortgages, a diversifier that has shown resilience towards the downside. And the target fund performance really speaks for itself. The fund return after a year of a rising rate period has generally been very positive. And if you compare the performance against other credit classes, historically, the fund has provided higher average returns. So you could see the higher average returns with the blue dots in the graph. So you could see that the target fund is in the rightmost, and it has 7.49% average returns. So that's higher than all the other sub-asset classes. And it also has less volatility. It's going to have a bit more volatility than your asset-backed securities, your investment grade, and basically those. But you'll notice that it has less volatility than all the other riskier asset classes. And that's represented by the range, the orange and gray bars. That's the range of possibilities in any given year. So in short, better returns at a lower risk. And this can also be seen against its peers. The target fund being the blue dot and all the other gray dots within the red circle, it has shown to provide superior returns. So returns are on the left axis, and the down axis is the risk with middling risk. So overall, less risk. the fund has its name in income in it, right? So it has paid out income quarterly at an annualized rate of around 3%. And apart from 2018 and year to date that were rising rate environments, the target fund has provided handsome returns and even double digit in 2016 and 2019 in all other years. So I'd like to stress this. Not everyone is an aggressive investor. And we saw it in the poll that not everyone really is an aggressive investor, more moderately aggressive and moderate. So this is actually a perfect fund for you. For those who don't want to really lose greater than 5% in any given year. And if you're moderately aggressive, you could use this fund to complement your aggressive funds. And if you're really investing for that dream car, your dream trip, your dream house, whatever, and have a medium-term investment horizon for around 3 years, this is also perfect for you. The goal of someone investing in the fund is both income and growth. As you saw from the returns a while ago, it could be double digit, and that's actually the total return. But you also saw that it would average around 3%. So overall, you get appreciation on the fund and also the income. And the fund is now available for quite some time in seed box. To start investing, you need to invest 20,000 pesos, but you could top up your investment for as low as 1,000 pesos. So if you want an investment that takes advantage of PIMCO's capabilities in navigating the credit markets for much lower risk than equities, then this is the fund for you. And Ms. Armaine, you may take the floor again.
So at this point, we would like to move on to the live questions from our audience, and we have several questions coming in already. So for the first question, what is the current yield and duration of the target fund? And how do these compare with other global funds employing the same strategy?
Well, currently the yield to maturity of the fund is 3.66% as of April 30, and the duration is 6.09 years. So while the aim is still to provide total return, the fund tends to hug the benchmark duration as compared to the other global funds, being plus minus 2 years from the benchmark index. And this makes it slightly more sensitive to interest rates. The yield is also smaller compared to its peers, but this is to really balance it out with any risk for carrying higher yields.
The second question, does the target fund follow a country, sector, or issue limit as well?
Well, the fund follows the regulatory limit. So this fund is following the UCITS limit of 10% at the issuer level and 20% limit at the parent level. But this is also regulated by the BSP as a feeder fund. So we also monitor that it won't go above 15% at the parent level as well. And what the fund has that's not really regulatory is a maximum exposure of 10% towards B rating. So if it's more junk, they wouldn't exceed 10%.
Next question. How will the target fund position in consideration of the expected policy normalization in the near term?
Well, it really depends on what kind of policy normalization you're talking about. So if it's decreasing of asset purchase, the fund currently is not invested into those securities where the asset purchases will be invested in. The Fed recently also said that they would hold off hiking rates. So if that's the policy normalization, really hiking rates, the expectation really for rates is really to go down lower. And the fund is currently at a duration of 6.09 years. Their benchmark is currently at 6.43 years. So it's still actually underweight the benchmark. So if the Fed or any other central bank really hikes, the fund will still be able to be better off. And that said, the fund really sees other opportunities like the Brexit normalization with the focus on gay banks, The focus on COVID-19 impacted investment grade corporates that have really shown resilience and positioning towards the growthy Asia credit.
For the next question, does the feeder fund maintain a constant yield distribution rate?
No, the feeder fund really depends on the target fund distribution. So whatever dividend you receive from the target fund, that's what's paid out. That said, the distribution rate of around 3% has been fairly consistent.
And given the fund has an auto redemption feature, are the proceeds automatically credited to the designated settlement account of the investor? And what is the expected settlement cycle for this?
Well, the auto redemption feature, yes, it's automatically credited based on your settlement account. We provide the payout dates during the declaration date, but it's normally 7 business days from when we declare a unit payout on this fund.
So another question we have here is, how does inflation affect people's appetite on credits or loans?
Well, with regards to inflation, that has an effect on interest rates. So normally what happens is the loans or the credits would have to increase in interest rates. And that might lower the demand overall for credits and loans. But that said, given that inflation looks transitory, we don't really see that rates on credits and loans would really rise at this moment.
So what is the major advantage of investing in global bonds over local bonds?
Well, one of the things that you'd want to consider is diversification. Being able to diversify both locally and globally allows for better performance for your portfolio. One of the things that is a major advantage of global bonds over local bonds is the volatility is really less. We have to remember that the Philippines is a emerging market. So given that it's an emerging market, it's not really as stable as all the other countries in the globe. So overall, the volatility or the risk we're taking by investing locally is a bit more than investing globally. And of course, what's nice about global bonds is, or at least this particular fund, it's invested diversely across the whole globe, whether it's in Europe, US, Asia. So given the overall diversification, it also allows for less risk.
So another question is the fund exposed only in corporate bonds or it has exposure also in global and government bonds?
It does have exposure to global government bonds. It's not the primary exposure. If you could go back to the slide with the different colors, you could see that it's also invested into some global bonds, mostly EM. So it's the EM sovereigns because that's considered credit as well, given the higher risk. But more on the developed market bonds, it would be more on the agency mortgages, the ones supported by the Fannie Mae's and the all the other agencies in the US. So that's the kind of government exposure that you could expect from this fund, not really the US Treasuries or that kind of exposure.
Okay. Thank you so much, DJ. And I think that is all the time that we have for the questions from now. But before we wrap up, any last words from you, DJ?
Well, thank you everyone for listening. I know that we don't have any more time for questions, but if you do have any questions, we're free to answer it. And it's really a good opportunity to be able to invest into the Global Bond Income Feeder Fund. This is actually one of the best funds in the market, not only here, but also globally. So we're very excited that you guys have access for it. For us, so it's 20,000 initial, but 1,000 every time you top up. So hope that everybody enjoys this particular fund, especially given the opportunity now.
Okay. Once again, thank you, DJ, for taking the time to share and discuss the ATRAM Global Income Feeder Fund. So now, ATRAM has a wide range of investment products, and our capabilities span across several asset classes meant to service different investment objectives of each individual. And with this, it is with a great pride that we announce that ATRAM has recently bagged 3 industry awards for 2021. ATRAM has won the Best Local Fund House in the Philippines by the Asian Investors Asset Management Awards for 2 consecutive years. Winning this award is a testament to ATRAM's dedication to creating and growing innovative products and services that benefit our clients. Next one on the list is the fastest growing fund management company in the Philippines from the Global Banking and Finance Award for 2021. With more than 30% growth in assets under management the past 10 years and with over 130 billion in AUM at the end of 2020, ATRAM is being recognized as one of the successful asset management firms in the country. And just recently, ATRAM was awarded the editor's Triple Star for the Assets ESG Fund Management and Investors Awards for actively integrating ESG into our investment process with a dedicated research team reviewing and advocating corporate ESG disclosure that benchmarks international standards. And for today's session, we hope that we have somehow assisted you and to take on tomorrow by investing in a fund that gives you maximum total returns from debt securities worldwide through ATRAM Global Bond Income Feeder Fund that is managed by an award-winning fund house. For more information about the fund, visit www.atram.com.ph. Now, did you know that you can invest in a fund that participates in diverse stream of credit strategies with enhanced income opportunities? That is the ATRAM Global Income Feeder Fund. It's time to start complementing your local portfolio with international sources of return today. Please stay tuned to know more.
Hello. To open an account with ATRAM, just visit our website at www.atram.com.ph. Here, you can learn more about all the funds and services that we offer. Our site will then guide you to our online investment platform, Seedbox, where you can start investing for just 1,000 pesos. But if you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page. Thank you.
So there you go. If you have any further questions or would like to learn more about ATRAM, again, please visit our website, www.atram.com.ph. And as promised, we will be announcing the winners of our ATRAM merchandise. So congratulations to the winners. And we will contact you through the details you provided during your registration on how to receive your prize. And in case you haven't registered yet for our next webinar, watch our very own experts, Marcy Chua, Managing Director and Head of ATRAM Wealth, Arlene Tan, Strategic Financial Advisor, and Sandra Arroyo, Head of Multi-Asset Strategies, to discuss the importance of expert advisory and portfolio management. You may do so by scanning the QR code flash on the screen, and you may also type in the link found on the left side of your screen. And again, if you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session and visit our YouTube channel, ATRAM Studios. We would also like to invite you to join ATRAM's new official Viber community group, #ATRAMPH Community, to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit the link found on your screen and get a chance to win ATRAM merchandise. So lastly, please answer the survey at the end of this webinar, and we would like to know your thoughts on today's topic. And on behalf of everyone at ATRAM, thank you again for your attendance and participation. We wish you and your loved ones continued health and safety. Have a great day.